Hello traders, the title of the video is one area wave trading mistake to avoid. Alright, the financial instrument that we are analyzing is Lane Christensen Corporation, EPIC LAYN, Lima Alpha Yankee November. This is an American store that belongs to industrials sector, engineering and construction. And we want to talk about one area wave trading mistake to avoid. Alright, so you have been using the area wave for some time and you are using the corrective wave, okay? You are mastering the corrective wave so you may catch the impulse wave. So because if it's going up, okay, we want to focus on the impulse waves, all right, so we may participate in the trend. Yes or no? So one area wave trading mistake one should avoid, because very often trader will identify a clear cut, okay, corrective wave, for instance a zigzag pattern, a triangle, ABCD, a triangle, expanding triangle, contracting its triangle, all right, and they want to buy, okay, in an uptrend, and they want to sell in a downtrend. But that is a mistake that traders are making, because they have identified a specific corrective wave and they take position because of that specific corrective wave, and sometimes they will lose, or very often trader will lose, because they assume that because the pattern is now completed, a clear-cut zigzag pattern is in place, a clear-cut flat correction is in place, the price will definitely, okay, start a new trend or a new cycle, either bullish or bearish, and sometimes they get into trouble. This is about one area wave trading mistake to avoid. So what I'm going to do now, you want to see, follow me. I'm going to start counting wave. This is my first wave, so zoom into it a bit. This is my tiny second wave. As I always say to traders, when it comes to area wave count, I'm very selfish, and I will say to you, this is my wave count, okay? But so let's put a bit of color into this so it become a little bit more interesting. The first wave, I'll label it into pink, and I'll color my second wave into red. Now our third area wave is a complex third area wave that is subdivided into 5 waves. You can see that our fourth wave almost overlapped our fourth. So hold on, please. Our second mono, where am I? I'm here now. So yes, our fourth mono wave of the fifth wave almost overlap the first mono wave or the first wave, but it just standing in on top of it. You can see that, okay? So our third area wave has been subdivided into 5 mono wave, 1, 2, 3, 4, 5. No area wave violation, almost, but not. Okay, so this is our third area wave for Lane Christensen Corporation. As always, feel free to disagree with my wave count and say, George, I don't know where you're coming from. So first wave, second wave, third area wave. And now here is my fourth wave now here. I don't know how you color it in red again. All right. And our fifth wave has been subdivided into 5 mono wave. In fact, this is an extended fifth area wave. By the way, if you want to know more about the fifth wave extension, okay, go to www.24elliottwaves.com and click on fifth wave extension, so you may understand more about the fifth wave extension. We know that if the first wave and the third wave are not extended, there is a high chance that the fifth wave will be extended. All right, so here it is. So when do we know that the third wave is not extended? The third wave is not extended when it does not exceed, okay, the 138.2% Fibonacci extension level, okay, It does not extend the 161.8%, the 161.8% Fibonacci extension of the first wave. But here you can see that it has been extended. Sometimes you may see that, okay? So this is not a normal, okay, third wave. So going back again to my wave count, first wave, second wave, third wave subdivided into 5 minor wave, fourth wave, and the fifth wave has been extended into 5 wave again. 1, 2, 3, 4, 5. Beautiful. All right. So now we see it. Okay. So our wave count is now completed during the trending phase, but it hasn't finished yet because we are talking about okay, Elliott wave cycle. Can you see the fifth wave in green? Okay. All right. So now that's it. All right, now the correction has begun. It looks to us at the beginning that this is a flat correction. At the beginning, it looks like a flat correction, yes or no? So you see here, 1, 2, 3, double retracement, boom, boom. Here, you see the pattern. Now, instead of having anotherly 1, 2, 3, 4, 5 wave down, we have a sharp correction. So we don't see the 1, 2, 3, 4, 5 wave down. So at this point in time, here we are. Today we say that, okay, a new cycle will begin, or a new trend will begin, is a mistake. Another mistake that trader will make also here is that because of the sharp correction down, because they are expecting a flat correction, they would think that it's going to go as it go. The sharp correction is a distortion to a certain degree. So when you see a sharp correction, just step back a bit. All right, step back a bit. Know that there will be a bounce. That's what we call it, the dead cow bounce. And there will be it will continue. You see, so after the sharp correction, what it did 1, 2, 3. You know the drill now. You know it. You know it. We talked about this before. You know the drill. After a sharp correction, there will be a bounce. That's what we call a dead cow bounce. And usually that dead cow bounce will bring the price. If I put it all the way to the tail, it will bring it to the 50% Fibonacci retracement level. You see the 50% Fibonacci retracement level. That's the level you want to watch. That's the story about the Elliott wave count. It's going on all the time. Sharp correction, a bounce to the 50% Fibonacci retracement level. The correction is not finished yet. Do not invest. Do not buy and hold that time. There will be a more down move before, okay, a little bit down move, or even more. You see here, it went down more. Okay, but here there is another pattern. So because as I said to you that the wave count is dynamic, one step at a time. So when we are here, we say, okay, flat correction is completed. Okay, probably, all right. We are in 2009. Okay, the S&P 500 was turning from bearish to bullish. So you see, this is one area where the mistake we want to avoid. So you will think that, okay, we're going to have again a new trend, but there was no trend. It's a correction. How do we know? Because of the structure of this price action. 1, 2, 3. 3 is correction. But in fact, what looks to us at the beginning of this wave count as a flat correction during the corrective phase is not a flat correction as such. And you understand why? It's in fact a zigzag pattern. You see this move down? 1, 2, 3, 4, 5. That is hidden in this sharp move down. It's a zigzag pattern. What is the structure of the zigzag pattern? It's 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3, 4, 5. Yes or no? But the first 1, 2, 3, 4, 5 has been what? A sharp correction, which is a distortion to a certain degree. So we can see the 1, 2, 3, 4, 5 down. But when we were here, we will be thinking of what? A flat correction. But people will say, Joe, you say it's a flat correction. It's not flat correction. No, but one step at a time. We are here, double retracement. First thing that's coming to our mind, we are thinking of a flat correction. Anotherly, 1, 2, 3, 4, 5 down. But here we have a sharp correction. Once we see the sharp correction down and it start bouncing, now we know that a dead cow bounce is likely to be formed. Apply the Fibonacci retracement and highlight the 50% Fibonacci retracement level. Look for an opportunity to sell in that zone. Okay? All right? We'll do the opposite. Okay? If it is, okay, we want to buy. Okay? All right? So it's in fact a zigzag pattern. So the one area where trading mistake that to avoid is that a correction Okay, so this is what we are talking about. So you see a specific corrective pattern. Never think that that is the end of the correction. Have I made myself clear? So you see a flat correction, you see a zigzag pattern, all right? You see any corrective, you see a triangle. Never assume that this is the end of the correction, because a lot of area where traders get caught with that. So it's not a big mistake as such, but you just need to be aware of it so you can handle it properly. It's not that traders don't know what they are doing. Yes, there was a bullish move. Now a corrective pattern is completed. Well, it's normal for traders to look for an opportunity to buy. But what we are trying to say here is that though you have a good reason to buy, to look for an opportunity to buy, just remember that one area with trading mistake one should avoid is that a correction may be prolonged, a correction can become a complex. When one identifies a corrective wave, one should not straight away assume that that is the end of that correction. So as you can see, traded that way here, beginning of 2009. This is quite an interesting subject here. That's why I want to point it out for you. Anybody at this point in time, 2009, when the S&P 500 was turning from bearish to bullish, will assume that this stock will also start a bullish trend. Because we have 1, 2, 3, 4, 5 wave, multi-wave completed. A flat correction is completed at this point in time. We will be expecting to say, so at this point, people say first wave, second wave. Here it is, third area wave. Where is it? None. Why? So probably, my friend, as we told already before, there won't be any third area wave if the fundamentals are not solid. Now, I haven't checked this stock to know exactly what has happened, talking about Google Finance, but the point I'm making here is that probably this stock has some problem on their balance sheet or in their business activity, and the smart money, okay, does not want to buy it at this point in time when the market itself was going down and the stock was going down. So you have to check. So after the corrective wave, you are expecting a new bullish trend. Perform Google Asset test, all right? Check the financial ratio, all right? Very, very important, okay? And do your due diligence. Check the news, what's happening with that company. Are they making money? All right. Do they have a brighter future? How are they coping with the competition? And so on and so on. And that will help you, okay, to invest. If you are an investor, if you are a trader, you see the corrective wave, all right, implement a top-down trading method to trade it, but do not assume that that's the end of that correction. But as you can see, finally now it's become clear to us that it's in fact a bigger zigzag pattern that was developing, but when we were here, we thought that that was the end of the flat correction, the end of the correction, that a new trend will start as the market itself is turning from bearish to bullish. But in fact, we have, okay, a bigger, okay, a zigzag pattern. So one portion of that zigzag pattern, all right, is hidden to us because of the sharp correction. But the second part of that zigzag pattern is become very, very clear to us. Now we have it here, very clear and neat here, okay. This is the hidden 1, 2, 3, 4, 5 corresponding to this section of the zigzag pattern, all right. And then we have our normal 1, 2, 3, which is this section of the zigzag pattern, followed by what? 1, 2, 3, 4, 5. But the first 1, 2, 3, 4, 5 is hidden in this sharp correction. So this is, so now again, as we are here, we were thinking that the correction has finished. The question is the correction finished here now? So personally myself, if I want to play with this, or if I'm an investor, I want to buy and hold this stock, okay? So it has been going down when S&P 500 was going up. Why? Okay, now we have to go to Google Finance, perform the Google Asset test, see what's happening, okay? check that sector, industrial sector, what's going on there, the leaders there. And then we want to check the news related to this stock and see, all right, what's going on. Okay, if the fundamentals are solid, everything looks good and bright, we see that they have a brighter future. Okay, now check the price. How long do you want to hold it for? Are you happy to buy at this price and hold it for 10 years? Okay, now the S&P 500 is now at the top in a triangle. Is it going to turn from bullish to bearish? Is it the best time to buy and hold stock? That is the question. All right, so this is the end of this tutorial about one Elliott wave trading mistake to avoid. So to summarize this video, all right, it's a common Elliott wave trading mistake to assume that a corrective wave is the end of a correction. A correction may be prolonged, being extended, all right, or become even complex. All right, so we may have a combination of corrective waves, flat or double zigzag, triple zigzag, making our wave count, our wave forecast a bit complex. So when one identifies a corrective wave after an impulse wave, one should assume that that is the end of that corrective phase. All right. So this is one Elliott wave trading mistake or Elliott wave investing mistake also to avoid. If you have any question or suggestion, put in the comment section, and in due course I will be recording another video to answer your specific question. If you like this video, give us the thumbs up. If you think that Joe, this is another blah 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 blah, please give us the thumbs down, okay? And if you have any comment, or put in the comment section. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. Happy trading to you all, and speak to you soon.